Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your weekly technical analysis of Kansas City and Minneapolis wheat markets. Kansas City wheat. In early October last year, the market broke down and out of the August to October 2022 bull channel. A choice was now presented to this market for the future. This is a parallel to what we saw in other wheat futures markets. Thus, this market had two avenues. The market chose what I described in my commentary from some months ago now, and I quote, the straightforward move down with potential targets for the break below of the bull channel. Thus, we have a primary target X down in the 903 zone, whilst the secondary hard to reach target X1 is way down below in the 759 zone, end of quote. In late November, prices reached the primary target at 903. But then prices hit the bright red trend line of the neckline of the small but influential October 2021 to January 2022 head and shoulders top. It's currently 844. And things slowed and became quite obtuse with contradictory patterns, one after another, as I will shortly show. The markets eventually did manage to reach down 3 weeks ago and achieve target X1 at 759. Before recovering back upwards, though the rise has been limited by, as I pointed out 5 weeks ago, the 50% Fibonacci line of the August 2020 to May 2021 move at 900. In the process, the market created a small horn top over last week and this. But that was not all. The weekly key reversal down 4 weeks ago led to a monthly key reversal down in April. However, in keeping with the contradictory nature of the market, the action this month has also set up the conditions for May to possibly be an outside month and maybe even an immediate countering monthly key reversal up. Thus, with still a week and a half to go, if prices close on the 31st of March either above 862 or under 776, then we'll be on. Right now, we are looking at a possible lesser outside month pattern. It is this time that I'd like to introduce part of my commentary from 5 weeks ago, and I quote, "It continues to be a bit of an indecisive move over this market. I can see good supports below and I can see good resistances above, probably reinforced with the declining long moving average, that's currently 877, plus also the 50% Fibonacci line of the August 2020 to May 2021 move, further higher at 900. Overall, much like last week, there seems to be no immediate pattern or path. Perhaps we will just go sideways for a bit, with a question mark added on that last statement, and that's the end of the quote. The situation seems not to have changed much since then, despite the wider ranges. I can see potential patterns, perhaps a diamond pattern or reverse head and shoulders pattern, but I'm not confident enough in those to highlight them in any way, not just yet. One final feature, much like Chicago wheat, we have a weekly key reversal down here made last week. Minneapolis wheat. Now, compared to Chicago wheat and Kansas City wheat, Minneapolis wheat here is an easier read of what is going on and the opportunities as well. In late January, prices punched up and out of the upper bear channel line of the first bear channel constructed between October 2022 and March this year. Then 11 weeks ago, we had the first glimmer of bearish pressure of how the medium moving average, currently 874, capped the market over the week of the 13th to the 17th of February for a move lower the following Monday the 21st. We saw some hesitation, which became a bear flag over the turn of February into March. This had a potential target X down in the 810 zone, and at the first attempt we came awfully close to reaching it. However, this was not yet to happen as the market had to construct a second bearish pattern, a bear channel that morphed into a descending expanding wedge pattern originating from December late last year, but really being constructed by February this year. This was a second shallower bear channel, currently 888 to 756, and highlighted in dark blue on my daily chart. The upper trend line, currently 888, has been reinforced by the previously mentioned declining medium moving average, currently 874, which together helped cap the market in very early April, mid-April, and again last week. I was looking last time to retire target X at 810 as it seemed to no longer functional. I'm glad I did not, as part of the construction of the lower trend line, currently 756, saw target X at 810 achieved. Thus, for the moment, that is it on the downside, apart from any future attempts at the lower trend line, or I suppose the upper trend line and the medium moving average. We will have to see how this pattern now develops and where it will take us. But for the moment, the second bear channel come descending expanding wedge pattern is where this market is going. Now, one final point, we, as in Chicago and Kansas City wheat, we had a weekly key reversal down here last week. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.